It's a new month here at Henssler Financial, and we found 3 important things to focus on in the market this month. Number 1, earnings. As we pass the midpoint of the earnings season with roughly 60% of S&P 500 companies having reported for Q1, reports have been stellar. 86% of companies have reported a positive surprise against analyst expectations, which if sustained would be the highest on record. The growth pace also is nearly the highest on record at 45.8% currently, which is just shy of the peak rate set in Q1 of 2010. Also, while guidance has been relatively limited for the full year for most companies, analyst estimates in aggregate have moved up 4.2% for the second quarter, which is also near the highest on record. There was a lone fly in the ointment, however, which brings us to number 2, inflation. Wall Street has begun the text mining of earnings reports in the quarter, and mentions of the word inflation are up 800% year over year. It appears supply chains have been stretched, and commodities and labor inputs are experiencing pressure. The Consumer Price Index in the latest report reached a multi-year high in March at 2.6%, and the Producer Price Index reached a decade-plus high at 4.2%. Forecasts see each measure reaching over 3.5% and 6% respectively, levels far above anything we have seen in some time. Seeing recent runs in commodities further supports high levels of inflation, with the Deutsche Bank index up over 75% since May of last year. While the Fed continues to deliver the message that this run of inflation is transitory, we will continue to monitor the situation. Sustained levels of inflation at the current rate will burden company profitability globally and could radically change the investment backdrop into the next few years. Number 3, housing. Limited supply and immense waves of demand have seen home prices skyrocket. In April, the median home price rose by nearly 20%, the highest on record, and the average home spent less than 20 days on the market, which was the lowest on record. Inputs such as lumber have driven the price of the average new build between $20,000 to $30,000 higher, according to a number of sources. This rate of change and apparent supply dislocations in the housing market are concerning for overall economic stability, and we will hope to see some moderation into the middle of the year. And that's been your Market Minute for the month of May. Thanks for listening.